Welcome to the podcast about investing in startups, where existing investors can learn how to get the best deal possible, and those that have never before invested in startups can learn the keys to success from the venture experts. Your host is Nick Moran, and this is The Full Ratchet.
Welcome to another special release of Investor Stories. On this installment, the experts discuss a startup that they did invest in, what the key factors were that led to yes, and how that investment has worked out. Here's the segment called Why I Invested. So on today's special segment, we have Christine Tsai of 500 Startups. Christine, can you tell us about a startup that you did invest in and mention the key factors that led you to yes?
Sure. So one example of a company that, I did invest in, I'll try to pick one that isn't the accelerator because I think we have a slightly different process for that. But a seed investment that I think has probably been the most successful one that I did to date was Ipsy. It was a company we invested in out of our second fund. Ipsy is I'm not sure if you're familiar with. It's the product itself is a subscription-based kind of beauty product, monthly subscription where you get different beauty samples and try it on. But I think what's more powerful behind Ipsy is really the community that they've built, working with consumers as part of the community, but also beauty influencers from YouTube. And most notably, Michelle Phan, who is a co-founder of the company. And, in that case, I have actually not really interacted that much with Michelle. She day-to-day doesn't run the company too much, although she is involved. But really, it's the other founders, Marcelo and Jen. And those are the two that I met with initially. At the time, this was maybe a couple years ago, the incumbent was certainly Birchbox, and they had gotten a lot of press. And but it was still maybe, I think, like 2012 or so. So I'm not sure how much they had taken off. But in any case, so in talking with them, they were referred to us by Matt Window, who's, I think, ex-Facebook and now at Uber. But he's also a pretty prolific angel investor. He had referred us to them. And I, met with Marcelo and Jen here at the 500 office. And I think, what was really compelling was, the founders themselves seemed very sharp and very experienced. And certainly the fact that they were working with Michelle Phan was very attractive. But I think the way they thought about what's the potential of the business beyond just being kind of another subscription commerce company was what really caught my attention. I think, certainly my background having worked at YouTube, still have a soft spot for video and that being very powerful. And I think that was a big thing for them in terms of the community and how they acquire users through YouTube and through video and working with influencers. So to me, I really saw the value of that. And, they even relayed that they obviously have, at the time, a big advantage with Michelle's followings. But I think even beyond Michelle, there were a ton of other beauty influencers and whatnot. And just this kind of market in general growing. It was still kind of, I think, in the early days back then. But now it's clear that just the influencer market is really where that demographic turns to. It's not as much like the Hollywood kind of unattainable personality, but it's really like these YouTube influencers or Instagram influencers. And I think for Ipsy, they saw that very early and they really leveraged that. And so, and also just general traction in terms of like the numbers and, how the business itself was doing, was pretty strong at the time. So we invested in their Series A. They had raised a small seed round, I think maybe before they launched, if I remember, but obviously, at the time, did I think would they become this several $100 million company that has shipping million bags a month and is where it is today? I don't know if I necessarily knew that. Again, this is all the hindsight speaking, but I knew that it could grow into something huge, and it's pretty clear that beauty is a huge industry.
Sure.
And I'm sure that they probably encountered a lot of, you're second to Birchbox. How is that going to work? But I think they really differentiated themselves on the community part.
So on today's special segment, we have John Greathouse of Rincon Venture Partners. John, can you walk us through a situation where you did decide to invest, what the key factors were that led you to yes, and how that investment has worked out so far?
Well, I don't want to, your investments are like your children. As you well know, you never want to sort of pick favorites, and it's hard to actually have a favorite. So I'll pick one that we exited, which I think goes to your question about outcomes. One of the things at Rincon that we really look at is serially successful teams. We love, like my good friend Mark's sister, he can't invest in everybody, but he really likes younger, less experienced founders. I love them too. I teach at UCSB and I love them in the classroom, but when in the boardroom, I'd rather have somebody with a little bit of experience. And so Evan Rifkin is a guy that Jim and I just really enjoyed. We knew him for a couple of years. We watched what he did. So when he came to us and said, I'm about to start my third venture, the other two were both successful, we were all in, and we described what he wanted to do. He had a couple of guys that he'd done prior ventures with already signed up to the venture, and that was a great ride. And actually, Mark's sister, speaking of which, he came in on that one too. The company was called Burstly, and we ended up selling Burstly to Apple. So it was a good outcome for everyone, and they ended up building a great business. Test Flight was the product that most people know. Test Flight was used by almost every iOS developer because it allowed you to work on your app before it was actually published. So good story, good outcome, and it really played out the way we thought it would because Evan is a seasoned pro and he knows how to grow a business.
On today's special segment, we have Lindel Eakman of Foundry Group next. Lindel, can you tell us a story about a fund that you invested in, how you met the founder, and what made you say yes?
Okay, so I'm going to give you two quick ones here. In 2003, I was real new in my seat at Utemco. I pulled I think it was about a 10-page deck out of literally a pile of them. I can still sort of see the pile in my mind's eye. It had an interesting message about the power of networks. It was a distilled message. It was coming from a couple of VCs that had individually seen quite a bit of success, but some pretty tough failure. Remember, we're coming out of the first technology challenge there in 2001 and 2. But they were raising a relatively small fund, and they were focused on the early stage. The theme of networks was kind of interesting to us. As I said, the size was good. The location was curious. It was New York City. There really wasn't much going on in New York. So we decided to visit with them, find out more. And when we did meet them, it was interesting. Their body language and the balance and the partnership was immediately obvious. They offset each other really well, and they made each other stronger. So we decided to take a chance on this first-time fund. I got to lead. That was my first venture deal I led, and it was Brad and Fred at Union Square Ventures. Wow. We were 20% of their fund as an anchor in their 2004 fund, and frankly, that was a turning point in my life. And as an investor, I got to see the power and how much influence that theme of partnership should have in your decision and how decisions were made. And also the success, the benefit of failure if you're a smart person and learn from it. The quick second story, it was another group of VCs. They had completely blown up their previous firm with too many partners, so poor decision making. They'd raised far too much money, which creates pretty poor incentives and just bad behavior. They had attempted to mitigate that damage for the prior LPs, and they were managing down the platforms. They were really doing the right thing. By the way, you're going to see some of this blow off from the current excess of fundraising where just groups don't do right and you end up having to manage it down. But this group I'm talking about, they distilled down to a bunch of guys that wanted to work together, even coming out of that mess. So they were committed as equal partners, which I think is important, to raise a right-sized fund, and they were going to keep it that way. In the group, you could definitely see one proven investor and at least one other talent that seemed likely to prove out. But there were a couple that hadn't proven at that point. But you could see that there was talent there and one that definitely did. Again, we took a risk on this first-time fund, and we were 20% of their initial fund in 2007, and that was Foundry Group. And today, they're my partners. That was the setup to two of my best investments at Utemco were first-time funds, but incredible partnerships. And I think that is part of the reason I put so much balance in the partnerships. I think success and failure are good lessons. You have to have a clear strategy and messaging with the right size funds. Much of that formula, I don't think it's changed since 2004 or 2007. I got lucky and was part of those two great funds. And now today I'm partners with the latter one and close with Fred and Brad still at Union Square.
Wow. Was it complementary skill sets, or is it sort of the unquantifiable relationships?
Yes, on both, I would say. But I would say most importantly, there wasn't a lot of noise in the signal, meaning rational decisions could be made because of the comfort level, the relationship, and the ability to disagree or agree without personal insult. And I think too often, by the way, guys are the worst about this. Too often people's self-import gets in the way, and their own perception of themselves inside the partnership gets in the way. And that if you can reduce the signal or reduce the noise in the signal, then I think you have a much better chance at a good outcome. No guarantees, but for me, that's the biggest piece. And you can see that in two of my best investments in my current partners today.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.